If you are a new business owner and you want to really get your first loan real fast, there are some strategies you need to put in place right now to make sure that you get in your loan as soon as possible. So here are the requirements I want you to pay attention to. When it comes to small business expense, remember that the the paperwork that you are actually giving to the lender, whether you are a small business owner, whether you are a new business owner, or even an existing business owner, you got to really pay attention to a few things. There are three things that the lender wants to really pay attention to in your paperwork. They want to look at your experience. It doesn't matter if you are a new business owner. Your past experience is going to really speak volumes about your ability to even use the funds to good like use the funds for a good purpose, okay? Because the whole thing is that if you have experience, let's say if you are, let's say, a serial entrepreneur, for instance, you have had multiple businesses before, the banks or credit unions will look at your loan application favorably because they know you know how to use cash. They know how to use business loans or business lines of credit to actually generate value in your business. Okay, so it's important. Experience is really important. So lenders will look at your business record. So if you have a new business, you have to look at your past business record to see whether or not you have the potential for profitability. That's the first thing. Then credit. So if you are a new business owner, chances are you don't have a good you don't even have a business credit score. So the lender is going to look at your personal credit score. Okay, so your credit score at the individual level will play an important role in terms of actually helping your case or not. So make sure that you probably look at your personal credit score while actually building your business credit score. If you are a new business owner, you want to start ASAP looking for let's say trade lines such as net 30 account, but also applying for a credit card, for a business credit card if you can. The third thing the lender wants to look at your cash flow. Now, when you are a new business owner, you don't have actual cash flow, which means what? You have to really have projected cash flows. So the lender is going to look at your business plan or your statement of financial, let's say your statement of cash flows to see your cash inflows and cash outflows. If you are a new business owner and you are trying to get your first loan real fast, remember that everything starts with you having a budget. Okay, so here's a strategy I want you to really put in place right now. Create a budget. I don't care if you are a new business owner. As a business owner, you will need a budget for your company. Okay, so create a budget. Now, if you are new in business, chances are the budget you have is let's say a projected budget. It's actually something more forward looking because you have no history to look at, no history to actually compare it and contrast your budget with. Okay, but you got to have a budget. So a budget is going to really show your ability to repay the loan. So have a budget, and you want to show this budget to the lender. The lender want to look at your financials to make sure your numbers make sense. Okay, so create a budget ASAP, and so you with a budget. The good thing about a budget is that it allows you to really track and document revenue and expenses for your new business. And so, revenue and expenses, we are speaking about what? Income streams. We're speaking about revenue. We're speaking about cash inflows and cash outflows. Okay. So, lenders are interested in seeing your cash inflows and cash outflows. Why? Because the difference between cash inflows and cash outflows is called net cash flow. So there is a statement called a statement of cash flow that shows lenders your ability to generate revenue and your ability to also repay the loan, among other expenses. So after creating a budget, if you are a new business owner, you want to really know, you want to have a clear idea about how much funding you need. It's not just about saying, I need $1 million or I need $350,000 or I need $100,000 or I need $10,000 for that matter or even 5,000. The question is, do you have a clear idea about how much you need and why you need that? Okay, you want to make sure that you are able to get the cash you need for the specific purpose you have in mind. So, because the amount you need will actually depend on your ability to repay the loan, right? Because basically, if you have a certain limit, but the lender doesn't really lend above that limit, you are really toast. So knowing the maximum business loan amount will cover the purchase and fit within your business budget, and this will actually will help you know how much you need to get for a startup business loan. And make sure, please, this is important. Make sure that your business can manage the loan repayments by actually estimating the business loan cost ahead of time. You have to be clear ahead of time. Okay. So and by borrowing, don't forget the borrowing cost. So this is the APR of the loan, but also the um, the origination fees if needed. So if you are a new business owner and you're trying to get your first loan real fast, you want to check your credit. Here, I think I've said this to you before, but I want to repeat it. Your credit is important. Your personal credit, that is your personal FICO score. So what you want to do is you want to go to TransUnion, you want to go to Experian, and you want to go to Equifax to make sure that your credit actually is decent, is more than decent, but most importantly, there are no errors that really that creeping in there. Okay, because those errors can really devastate your your credit score real fast. So you want to really pay attention to those things so that there are no derogatory items actually messing up your credit. Next thing you want to do here is that you want to determine what loan type may be best for you. Do you have an LLC? Do you have an S corporation, a C corporation? Do you have an LLP or other form of business? Right. Every loan is different. And by the way, you may even apply for a business line of credit. Maybe you don't need a loan really. You need a business line of credit. Okay. So you by determining which loan may be best for your company, you are increasing your chances of actually being approved. Okay. When it comes to the types of business loans, you have a lot of them. You have a equipment loan, so you are able to use it to purchase necessary equipment with loan amounts potentially in the millions. Why? Because this is collateralized loans, really. Because in most cases, the equipment you take the loan to acquire is going to constitute the collateral here. You also have a business line of credit. So here we are speaking about revolving credit, kind of similar to a credit card, but it's cash. Okay, this is not just money you can spend through plastic. No, you can really withdraw cash from your ATM. By the way, and you also have a term loan, a business term loan. This loan type has predictable terms and payments. So if you are trying to really see what loan type may be best for your business, maybe you can actually reach out to the government to kind of help you through SBA loans. SBA has micro loans, just loans in general, okay, for disadvantaged businesses. You also have invoice financing, which is another possibility for you to get funded if you really, if you are doing business with a B2B, like if you're doing business with other businesses. In other words, you're selling to other businesses. If you are in the B2B space, invoice financing can be really interesting to you. And finally, you have merchant cash advance. So this is actually great for emergency or bad credit business loans. So that's important. If you are a new business owner, are you trying to get your first loan this year? I want you to really compare lenders. The thing is, when it comes to getting a business loan, you have all kinds of possibilities, but you have to know which type of lender is actually great for you. So when it comes to loans to startups, you have banks. Banks actually have occupied this traditional space, the traditional lending space for years or even decades. But in the last few years, you have a lot of newcomers coming to the lending space. So, for instance, you have credit unions. So, credit unions can be great for you when it comes to getting the funds. And unions may even give you more. Banks have the balance sheet at their disposal. In other words, they can really lend you millions of dollars potentially, but you got to have the relationship with them and you got to have the cash flow. If you are a new business, it might be a little tough to actually get a loan, a decent loan from a bank, unless you have a prior relationship with that bank at the personal level. So that's the bank. Then you also have credit unions, kind of similar to banks, but credit unions actually work with you, even if you are a startup, really. Okay. You also have online lenders such as Blue Vine. Okay. I mean, those online lenders are sometimes called fintech or non-bank lenders. Okay, they help like borrowers who may not meet traditional lending requirements, and these lenders may specialize in specific types of loans or serve startups that have bad credit. Okay, so that's something to really think about. And you also have SBA loans. So SBA loans are given by traditional banks or credit unions with the support of the government through the SBA. You also have micro loans. So micro loans are loans that are really small, so less than $50,000. So maybe your business could qualify for a micro loan. And you also have alternative lenders. So alternative lenders are actually they're neither banks nor credit unions nor online lenders. They're just alternative lenders, and they actually their appetite for risk is higher. So they'll give you more cash, but with higher interest. If you are a new business owner and you're looking to actually get your first loan fast, you want to gather the necessary information and document. Excuse me. So what I'm trying to say here is that basically there is some paperwork to really pay attention to if you want to make sure you want to impress the lender right off the bat. Okay. So the paperwork that you have to supply to the lender will include everything about your business credit history, your personal credit history. By the way, the personal credit history and business credit history, the lender can actually get that info without you. They can actually go and really get the info themselves through Experian, Experian, Equifax, or a TransUnion. And if it's for the business, they can go to Dun and Bradstreet, to Experian or Equifax. But if you have the info, that could help you. I mean, if you have the latest credit report from those agencies, just insert it in your loan application package. You also want to have your EIN. Your EIN is going to help you actually legitimize your business more. Okay, because you get your EIN from the IRS, by the way. Okay, and so that's important. You want to have business bank statements within your paperwork, business bank statements, financial statements such as balance sheet, income statements, or a statement of cash flows. If you have business income tax returns, let's say you have filed, you actually were incorporated in November or December, so you probably had already a chance to file your first business tax return. You want to really attach that to the application package, and also business licenses, proof of business formation. So I'm speaking here about articles of organization, articles of incorporation, legal documents, a business plan, or even funding request. So if you have collateral offered, you can also include that in the package. And you want to, after you have all this, you can apply formally. You can apply formally for your first business loan. Okay, there is some kind of a step you have to go through to make sure that you are increasing your chances of getting the loan that you want. The thing is that when it comes to applying for your first business loan, you have to look at the geography where your business is located. Okay, so maybe it's just better to go to a branch in face to face and apply there as opposed to doing things online. Some banks will want you to really do things online, especially if you're asking for a relatively low amount. So if you're looking for, let's say, less than $100,000, they will allow you to actually do things online. But if you're looking for a big amount, then they want to see you face to face. So you might need to go to a branch. If you are a new business owner looking for your first loan, you have to understand that basically there is a possibility for you not getting that loan. Okay, because it's not really easy. Okay, because the process can be difficult for startups because lenders often want to see strong revenue, credit history, and time in business. But the thing is that if you choose the type of loan that you want and the type of lender that you want, so instead of going to a bank, you may go to an alternative lender, or you may go to an online lender, or you may go to a credit union, for instance. Okay, so if you don't qualify, if something happened, I mean, God forbid, they denied you, they looked at your paperwork, they're like, no, we don't want to really work with this company. don't despair. Don't really be pissed or anything. Don't be frustrated. This is part of the game, okay? If your business doesn't yet meet the criteria for any type of small business loan, you still may have a few options. For example, depending on your needs, you may actually want to consider opening a business credit card. Credit cards typically charge a higher interest rate rather than other types of. I mean, they charge higher interest rate than other types of business financing, making them more appropriate for funding ongoing purchases like supplies or advertising instead of significant expenses. A business rewards card can be a good choice for everyday purchases, allowing you to accrue rewards points or miles. So that's kind of something to really think about. And by the way, if you need to carry a balance, a low interest business credit card or one with a low introductory APR may be helpful as you grow your business. And also, using a business credit card also is an opportunity to establish a strong credit history for your business right off the bat. And you have the possibility to get it done real fast. Okay. Another option is to rely on alternative financing strategies like loans secured by existing purchase orders, or invoice factoring, which really involves selling outstanding invoices to a third party at a discount. Of course, the availability and attractiveness of these options will vary depending on lenders' requirements and your organization's financial outlook. So, if you are a new business owner looking for your first loan, remember that sometimes if you have to supply collateral, then a collateral is actually a fixed asset. So, a tangible asset, it can be equipment, it can be a machine, it can be whatever. It can be a business card also. But you have to really, you can pledge that assets to actually get the loan. That's if you can't get a loan using normal ways, quote unquote traditional ways, okay? Because the lender wants to see some kind of you taking part of the risk too. You can also ask yourself, do you really need a loan, or maybe you need a business line of credit? This is not the same thing, okay? So be careful about what you want. And also, one thing I want to say here is that you have to really understand that your needs might change. Like you might want, as a new business owner, you might want to have a business loan, then realize 3 or 6 months from now that you really need a business line of credit or a business credit card or something in between, okay? Or sometimes you can even have something called structured financing. In other words, you go to a bank to actually structure for you a bespoke financing agreement, a bespoke financing program that can help you actually get the funds you need for the purpose that you need. Okay, just remember that if you are going to get your first loan as a business owner, make sure that you have a business plan and also financial projections. Don't lie on the projections. You want to make educated guess. You want to make an educated guess that really shows the potential of your business in terms of generating revenue. That way, you got to have numbers. If you're asking lenders to really give you money, you want to show some kind of numbers. Those numbers can be actual or projected. That's going to help you actually get the loan real fast. And you really need that flexibility, that what I call that quantitative flexibility, that quantitative information to tell the lender, hey, listen, basically I'm running a business that has potential, because through numbers you can communicate business potential to lenders who will have a better time considering and even approving your application. In conclusion to this conversation, I spoke to you about what you need to do to get your first loan as a new business owner. I spoke to you, I gave you the requirements, the strategy, the extras, and now the conclusion. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.